one of the things that I'm always curious to pick people's brains about in the crypto sector is kind of where they see the future of the industry in terms of how many different crypto assets will be successful ultimately, right? You know, you have Bitcoin maximalists who think that it'll just be BTC and everything else goes to zero. Some people who think there'll be just a handful. Some people who think there'll be a huge plurality. So do you have any views on that in terms of whether you think there'll be a lot of successful crypto assets or just a few in the long term?
Well, again, I go back to first principles of investing. If you look at ICO companies as startups, at least the ones that weren't outright frauds, if you look at them as startups, 90% of startups fail. So I think in the crypto space, we can naturally assume, let's say 50% of these, of the huge, insane range of ICO projects were frauds, or at least people did a lame effort to try to do anything and it didn't work. When it wasn't super easy, they let it go. So you got 50% left, 90% of those are going to go belly under. So it's probably 95% of all crypto projects are going to die. And that sounds like a huge number, but it's really not. I mean, it's in the overall context, it's pretty natural. But 95% of 2,600, or pick your number, is still quite a bit. So clearly BTC is going to survive for a long time. Probably until the last one is mined. The headlines that's going to make, I don't know if any of us will be alive, because it used to be 2026, that's 2041. I recently saw a study that talked about 2090 because difficulty is increasing so much. Who knows? We may never find the last Bitcoin, but when it hits the last million and the last 100,000, everybody likes round numbers. That's going to be huge headlines, right? Drive the price up, at least for a while, rationally or otherwise. But there are going to be a lot of other, let's call them cryptocurrencies, running around. There'll be the backbone cryptocurrencies, right? The ETHs, the IOTAs, and some of the others. There'll be the anonymous coins that governments will try to go after, the Dashes and the Moneros. There'll be coins that provide direct utility, like BAT or Presearch, for instance. And there'll be tokens like subway tokens and amusement park tokens, and we haven't got down the rabbit hole of the etymology of that, but hey, they have some utility, and they got a public market, cool. So a lot of them will survive, and then we'll get back to the valuation discussion that we had earlier. So in numerical terms, it'll be maybe triple figures, but almost certainly won't be quadruple figures. And if it is, it's only going to be because there's some meta coin that's going to link them all together, because you can't walk around with an electronic or a physical wallet with 500 currencies in it, right? So there's got to be a way of simplifying that down effectively to one, or to the point where the currency just essentially becomes zero, and you just look at a thermometer in your wallet to see if you've got the money to pay for something. So it's not going to go to zero, but it's kind of a comparison of apples and oranges, because as we discussed earlier, Bitcoin plays a very different role in financial life than say ETH does, or XRP does, or Presearch does, or IOTA does. Very different roles.
Sure, that makes sense. I think that will segue into the last question that I love to ask everyone in these, which is two parts. First, as you look at the industry today, the crypto sector, that is, what are you most excited about in terms of the opportunities you see out there for the future of crypto? And then on the other hand, what do you think are the biggest challenges ahead for it?
Well, let me take them in the other order. The biggest challenge for crypto is mainstream acceptance. And really generalizing, there are probably two big baskets that fits in. One is regulation, and the other is ease of use. And they're very, very different. There's not much overlap between the two of those, but both of those factors are real challenges for the crypto space, if I'm speaking at a super high level. What I'm excited about is the general acceptance, the increasing acceptance of crypto. I mean, without that, it just becomes somebody's hobby. If it's only 1.5 million people on an island in the Mediterranean that accept BTC, it's not all that big a deal, since you got 7 billion people on the planet. But the fact that it's rolling out things like Libra, regardless of what you think of the project, the fact that people actually took it seriously and pay attention to it, that to me, the general acceptance is probably the first point that I'm really excited about. The second one is tokenization of real assets, which in a way is crypto, in a way it's not at all crypto. But when you can, my favorite example is, I want to go to and I still may do this, go to the president of the Louvre Museum in Paris and say, hey, how'd you like to sell the Mona Lisa? And of course, he'll tell me to pound sand and throw me out. I say, okay, how about you sell half the Mona Lisa? You keep half of it, but you keep physical possession. Okay, you sell 49%. And so then you go to all the art lovers in the world and say, we're going to sell you, we're going to tokenize the Mona Lisa. The Mona Lisa is now represented by 1 million tokens. We will sell you a token for $1,000, which not incidentally values the Mona Lisa at $1 billion. And you can represent that you are legitimately an owner of the Mona Lisa. And for another $50, we will give you a certificate that's gold-plated that says, you know, hang on your wall, that says you own 1 token of the Mona Lisa. And every third Thursday of every quarter, you can go in and look at your piece of art that you own in the Louvre free of charge, or whatever, some such combination. Then the Louvre, which gets $490 million out of that deal, goes out and buys some more art, which, if it's popular enough, it can tokenize, et cetera, et cetera, et cetera. You know, rinse and repeat. So the tokenization of real estate, for instance, which everyone loves, and at some point in time there'll be an announcement for a new subway system in Austin, Texas, and here's where all the subway stops are going to be. And you can go to a map with tokenized real estate and you can put $1,000 into each of one building next to each of the locations where the subway is going to stop. That's impossible today. You can't put $1,000 in a piece of real estate. But tokenization will allow that. Tokenization in terms of provenance, right? So wine, sports memorabilia, blood diamonds, everything. You'll know where it came from, because if it's listed twice on the blockchain, you got a problem. Those sort of developments where you really, they're more blockchain developments than crypto. Trading tokens need a blockchain, but cryptocurrencies or the blockchain doesn't need trading tokens. The blockchain is all about trust. It's simply a list you can trust. And if you look at the finance system, the entire finance system is built on overcoming a lack of trust. Not distrust, but just, I can't trust you because I don't know you. That's why letters of credit exist. That's why literally the entire financial system has been built. What the blockchain is going to do, just because you can trust it, it's much easier to list the business or the business sectors that won't be seriously affected and positively affected by the blockchain, by a trusted source of information, than it is to list those business sectors that will be affected by it. And I think I'll stop there, because as I think about it, there are a whole bunch of other areas I get truly excited about, but those are some of them.